Everyone is looking at the wrong calendar. Right now, the entire internet is screaming about $100,000, $200,000, or the Supercycle. You open Twitter, it's green. You check your portfolio, it's green. Your taxi driver is asking you which meme coin to buy. It feels like we are in the golden window where losing money is mathematically impossible. That is the trap. While everyone is busy calculating how many Lamborghinis they can buy in late 2025, nobody, and I mean nobody, is talking about the buzzsaw waiting for us in 2026. There is a mathematical pattern hidden in Bitcoin's history that has a 100% strike rate. It doesn't care about the news, it doesn't care about the Fed, and it certainly doesn't care about your feelings. It suggests that while 2025 is the party, 2026 is the hangover that puts you in the hospital. Remember, none of this is financial advice, just what I'm doing with my own money. Do your own research before you press that buy button. Here is the problem. Most people treat Bitcoin like a tech stock that just goes up and to the right forever with minor pullbacks. But if you strip away the noise and look at the raw timeline of every single cycle, you see a terrifyingly accurate rhythm. It is called the time-based capitulation. Bitcoin operates on a roughly 4-year cycle, which is about 1,460 days. But this cycle isn't random. It is split into two very distinct phases. You have the accumulation and bull phase, which lasts roughly 1,000 days. This is the fun part. This is where we are right now. But the bill always comes due, and the bill is exactly 365 days of pain. Let's look at the receipts, because numbers don't lie. Go back to the 2013 cycle. We had a massive run-up. Euphoria everywhere. People thought the internet money was taking over the world. Then 2014 hit. What happened? A full year of bleeding. A full year where every dip you bought kept dipping. Fast forward to 2017. Bitcoin hits $20,000 in December. It was on the news every night. But then the clock struck midnight. Bitcoin hit its bottom exactly 12 months later in December 2018. That is exactly 365 days of a bear market. Fast forward again to 2021. We hit the peak in November. Everyone called for 100,000. We didn't get it. Instead, we got a crash. When did we hit the bottom? November 2022. Exactly 12 months later. That is another 365 days of the market deleting wealth. Do you see the pattern? The market doesn't just crash randomly. It crashes on a schedule. It allocates exactly 1 year to flush out the leverage, the greed, and the tourists who showed up late to the party. So, here is the strategy. Most people are playing a price game. They are saying, I will sell when Bitcoin hits 150,000. That is a mistake. Price is unpredictable. Mania can push price to levels that make no sense. Or fear can suppress it. Price is a liar. I am not playing a price game. I am playing a time game. If the history of the last 3 cycles holds true, the bull run, the 1,000 days of up, will likely peak in late 2025. That means the moment the calendar flips to 2026, we are entering the kill zone. My strategy is defensive. I am not trying to sell the absolute top. I don't care about catching the exact wick. I care about not being the guy holding the bag when the 365-day clock starts ticking. The goal isn't just to make money, it's to keep it. The market is designed to transfer wealth from the impatient to the patient, but in 2026, it will be designed to transfer wealth from the believers to the realists. So what is the specific action? You need to shift your mindset from accumulation to distribution before the clock runs out. When your friends who haven't spoken to you in 5 years text you asking how to buy crypto, that is your signal. When the media starts talking about how this time is different, that is your signal. The specific move is to look at the calendar. If we approach late 2025, say October, November, or December, and the market is parabolic, you don't buy. You don't dollar cost average. You start scaling out. You move into stable coins. You move into boring assets. You sit on your hands for a year. Compare this to the average retail investor. They will buy the ETF. They will leverage up in December 2025 because they think the supercycle is starting. They will ride the wave down in January, February, and March 2026, telling themselves it's just a healthy correction. By June 2026, when their portfolio is down 60%, they will panic sell. You are going to be sitting in cash, waiting for the 365th day to re-enter. You are going to let them pay for your cheap entry. Now I know what you are thinking. I hear this objection all the time. But why not just HODL? If Bitcoin goes up over the long term, why stress about timing the market? Why not just hold through the drop? Don't be a hero. Sure, if you hold for 10 years, you will probably be fine. but can you stomach a 70 or 80% drawdown? Most people think they can until they see their net worth cut in half and then cut in half again. The mental toll of watching a year of gains evaporate is what causes people to sell the bottom. Plus, it is about opportunity cost. If you hold through the drop, you have zero buying power at the bottom. If you exit before the drop, you double or triple your stack when the 365 days are over. Holding is good. Buying the blood with dry powder is better. So, 2026 is coming. It is historically scheduled to be the darkest year before the next dawn. You can either ignore the data and hope this time is different, or you can respect the cycle. I want to know where you stand. Are you team cycle, planning to sell in 2025 and wait out the storm? Or are you team forever, holding through the crash no matter what? Comment team cycle or team forever down below. I read every comment. And if you want to survive the next bear market, make sure you subscribe.